Top 3 passive income investments for 2025. Welcome to 80/20 Investing. In this video, we're diving into building streams of passive income in 2025. If you're tired of trading time for money or are curious about creating lasting financial security and freedom, you've come to the right place. Today, we'll uncover 3 of the best passive income investments for 2025. Strategies that can help you grow your wealth, free up your time, and set yourself on the path to financial independence. But first, let's clarify what we mean by passive income. Passive income doesn't mean no effort. It's income that, once set up, requires minimal ongoing involvement. Think of it like planting a tree. You put in the effort to nurture it initially, but once it matures, it bears fruit with little additional work. Why is this important? In 2025, the economic landscape is more volatile than ever. Rising interest rates, shifting markets, and technological advancements are reshaping how we invest. A solid strategy for passive income can give you financial freedom, whether you're looking to retire early, work part-time, or simply have more flexibility. Now, let's dive into the top 3 passive income investments that can help you achieve your goals. 1. Real estate investment trusts, REITs. What are REITs? A REIT, or real estate investment trust, is a company that owns, operates, or finances income-generating real estate. By investing in REITs, you essentially own a small portion of various properties, residential buildings, malls, warehouses, or even data centers, without ever having to deal with tenants or property maintenance. Why REITs in 2025? REITs are especially appealing this year because the global demand for logistics hubs and data centers is skyrocketing. For example, e-commerce growth is driving demand for industrial REITs like warehouses, while tech companies need data centers to store their growing amounts of information. Practical example. Let's say you invest $10,000 in a REIT specializing in industrial properties, such as Prologis. With an average annual dividend yield of 3 to 4%, you could earn $300 to $400 a year passively. Combine that with potential property appreciation, and you've got a long-term winner. We fondly remember the golden days of 2009, when we seized the opportunity to buy Singapore and Japanese REITs for mere cents on the dollar amidst market carnage. These undervalued gems not only rebounded, but also continued paying out dividends, making them the ultimate win for savvy investors. Those were the times, but who knows? History might repeat itself, and such opportunities could return. Stay prepared. Benefits. 1. High dividend payouts. 2. Liquidity. You can buy and sell REIT shares like stocks. 3. Diversification. Access to real estate without a massive upfront investment. Pro tip: research REITs focusing on sectors with growth potential in 2025, such as logistics and healthcare. Websites like nareit.org can help you compare options. 2. Dividend stocks. What are dividend stocks? Dividend stocks are shares of companies that distribute a portion of their profits to shareholders regularly. These payouts make them a reliable source of passive income, especially if you reinvest the dividends for compounded growth. Why dividend stocks in 2025? Certain industries like utilities, energy, and consumer goods remain strong regardless of economic conditions. For example, companies like Johnson & Johnson or Coca-Cola have a history of stable dividend payments, even during market downturns. Practical example: imagine owning 200 shares of AT&T, a company with a dividend yield of around 6%. If each share pays $1.11 annually, you're generating a passive income of $222. Now, if you reinvest those dividends consistently, your returns could compound over time, creating a snowball effect that significantly boosts your income in the long run. Tips for selecting dividend stocks. 1. Consistency is key. Focus on companies with a strong history of consistent dividend payouts spanning at least 10 years. 2. Payout ratio matters. Look for a dividend payout ratio below 60%, ensuring the company has room to reinvest and grow while maintaining dividends. 3. Diversify. Spread your investments across multiple sectors to mitigate risks and enhance stability. Our favorite examples. High dividend-paying tobacco companies are a noteworthy consideration. While they might not shine in booming markets, they serve as a psychological anchor during bear markets. Historically, consumers maintain habits like smoking, even in the harshest economic climates. and some even return to traditional tobacco products. This consistency in consumer behavior helps ensure steady returns when other sectors face turbulence, making them an interesting addition to a diversified income portfolio. 3. Index funds and ETFs. What are index funds and ETFs? These are baskets of stocks that track specific market indexes like the S&P 500. They offer diversification and are managed passively, making them ideal for long-term investors. Why index funds and ETFs in 2025? Index funds and ETFs are excellent tools for building wealth in 2025, especially in a volatile market. These products offer diversified exposure across a range of assets, helping to minimize risk while targeting steady returns. Think of them as a variation of REITs, or a risk-diversified way to invest in top-performing dividend-paying stocks. In a year where market uncertainty is high, low-cost index funds provide a reliable way to invest broadly across entire markets without the need to pick individual stocks. By combining diversification, affordability, and alignment with market trends, index funds and ETFs remain a cornerstone for both cautious and growth-oriented investors. Whether you're building a conservative income stream or seeking exposure to high-growth sectors, these products offer an adaptable, strategic path forward. Practical example: investing $1,000 in the Vanguard Total Stock Market ETF, or VTI, gives you exposure to over 4,000 U.S. companies. Historically, VTI has delivered annualized returns of about 8%. Over 10 years, your investment could grow to $2,158 without lifting a finger. Advantages: first, low fees compared to actively managed funds. Second, automatic diversification across industries. Third, easily tradable on stock exchanges. Warning: avoid passive income scams. Be especially cautious of high-yield investment schemes, which are rampant these days, particularly in the crypto space. Promises of guaranteed yields of 15% or more are alluring but often too good to be true. These schemes frequently rely on risky and unsustainable practices such as, first, classic Ponzi schemes. Returns to earlier investors are paid using funds from new participants. Eventually, these schemes collapse, leaving the majority of investors with significant losses. Second, risky lending models. Many crypto platforms engage in dangerous mismatches by borrowing short-term funds while lending long-term. When markets shift or liquidity dries up, these platforms face massive losses. Not for them, but for your money. Key takeaway: in the crypto space especially, if an investment sounds too good to be true, it almost certainly is. This isn't a critique of crypto or blockchain technology. Both hold immense potential to revolutionize the way we transact. Rather, it's a warning about where speculative and risky money is concentrating these days. Stick to reputable and transparent investments that align with proven, time-tested strategies. Always conduct thorough research before committing your hard-earned money. Don't let flashy promises or unrealistic guarantees mislead you. Remember, greed and fear have consistently been the downfall of investors throughout history. Stay disciplined, avoid emotional decisions, and focus on sustainable, rational strategies to safeguard and grow your wealth. To recap, the top 3 passive income investments for 2025 are: 1. Real estate investment trusts, REITs. 2. Dividend stocks. 3. Index funds and ETFs. Diversifying your investments across these options can help you weather market fluctuations and build a steady, reliable income stream. Remember, passive income is about freedom. Freedom to spend your time on what truly matters most. If you found this video helpful, don't forget to like, subscribe, and share it with fellow investors. For more insights, grab your copy of The 80/20 Investor or Index Funds and ETFs. What they are and how to make them work for you. Amazon links are in the description below. Want regular updates from the team at 80/20 Investing? Subscribe to our free newsletter using the link below. Thank you for watching. And here's to making 2025 a year of smart, disciplined financial decisions. Disclaimer: the information provided in this video is for informational purposes only and does not constitute financial or investment advice. Always consult with a licensed financial professional before making any investment decisions.